All right, let's talk trading. We're going to break down the absolute basics right here, right now. Have you ever looked at trading charts and just felt completely lost? Like you're trying to read a whole other language. Or, hey, maybe you've already tried it, threw some money in, and it just disappeared, leaving you wondering what on earth you did wrong. If any of that sounds familiar, then you're exactly where you need to be. Our goal today is simple: to give you a solid map of this whole world. We're going to cover what trading even is, the different ways people do it, and, the actual places where it all happens. Think of this as your personal GPS for the financial markets. Okay, let's dive right in. So first things first, what are we even talking about when we say trading? At its heart, it's really just the act of buying and selling things. We call them financial assets, hoping to make a profit. The big idea here is that you're not usually buying something to hold on to for like 30 years. Nah, you're trying to capitalize on those shorter-term price changes. And the core principle? It's the oldest rule in the book. Buy low, sell high. Simple, right? That little space between where you bought and where you sold, that's your profit. Now, the idea is easy to grasp, but the real trick, the real skill, is building a strategy so you know when to get in and when to get out. And just to give you a sense of scale here, check out this number. The Forex market, and that's just one of the markets we'll talk about, sees over $6 trillion trade hands. And that's not per year, that's every single day. It's just a mind-blowing amount of activity. But you know what's really amazing? It used to be that only the huge banks and guys in suits could play in the sandbox. Not anymore. Thanks to technology, anyone with a phone, a laptop, and a bit of starting cash can tap into these massive global markets right from their couch. That's a huge game changer. So trading isn't just one thing. It's not a one-size-fits-all deal. There are totally different styles, and the key is to find the one that fits your personality and your life. It's all about finding your rhythm. Let's look at the four main types. First up, you've got day trading. The name says it all. You're in and out of trades within the same day. No holding overnight. This is high-speed stuff that needs your full attention. Then there's swing trading. This is a bit more relaxed. You might hold a position for a few days, maybe a few weeks, trying to catch a bigger swing in the price. It's a much more balanced pace. For the super patient, there's position trading. This is the long game. We're talking holding for months or even years. It's kind of blurring the line into investing. And finally, on the complete other end of the spectrum, you have scalping. This is as fast as it gets. In and out in minutes, sometimes even seconds. Just grabbing tiny little profits over and over again. This one's definitely for the pros. All right, so we get what trading is and the different styles. But where does this all actually happen? Let's take a look at the 5 main global arenas you'll be dealing with. These are the big 5: stocks, Forex, crypto, commodities, and indices. Think of them as different playgrounds, each with its own vibe, its own rules, and its own kinds of opportunities. Let's start with the one everyone's heard of, the stock market. When you trade stocks, you're buying a tiny piece of a public company, like Apple, Tesla, or Amazon. You're basically betting that the company will do well and its share price will go up. Next up is Forex, which stands for foreign exchange. This is where you trade one country's currency against another, like the US dollar versus the euro. And remember that wild $6 trillion a day figure we saw? Yeah, this is where that happens. It's the biggest market on the planet. And then you've got crypto. This is where you find Bitcoin, Ethereum, and all the others. This market is a whole different beast. It's open 24/7, and it is famous for being incredibly volatile. It's like a roller coaster, Those huge, fast price swings mean there's a huge potential for profit. But you got to remember, it also means a huge potential for loss. Now, the commodity market is cool because you're trading actual physical stuff. We're talking about things like gold, silver, crude oil, even things like wheat and corn. A lot of traders really like assets like gold because it's often seen as a stable, reliable place to put money, especially when the economy gets a little shaky. And finally, we have the index market. This is a really interesting one. Instead of trying to pick a single winning stock, an index lets you trade a whole basket of them at once. So when you trade the S&P 500, you're not just betting on one company, you're betting on the overall performance of the 500 biggest companies in the US. It's a way to trade the health of the entire economy. So there you have it. That's the lay of the land, the what, the how, and the where of trading. Now, obviously, this is just the beginning of the journey. From here, it's all about picking a trading platform, figuring out how much you want to start with, and, this is the big one, learning the essential rules that'll help you protect your money as a beginner.
And that really brings us to the big question. But it's not for me to answer, it's for you. Now that you've seen the map and all the different territories, which one of these worlds gets you the most excited? Which market are you going to start exploring first?